Hi, everybody. It's Peter Schiff. It's Friday, October 2nd, 2009. Well, the week is finally over, and we capped a week of relatively weak economic data with another disappointing number on non-farm payrolls. We lost another 263,000 jobs this month. The official unemployment rate increased to 9.8%, but the unofficial unemployment rate, which counts the disgruntled workers and the people who have accepted part-time jobs while they continue to look for full-time jobs, that unemployment rate is now 17%. And the 9.8% unemployment rate officially is a 26-year high. Also, we got numbers yesterday. Unemployment claims, I think, jumped 17,000. We're back above 550,000 claims. People are still calling this a jobless recovery. It's jobless, all right, but it's not a recovery. I mean, I wrote an article about this that you can read on the website, on my corporate website, Europac.net, on the fallacy of the jobless recovery. The reality is the economy is not recovering from anything. The politicians, the government is making sure of that. People still think that because we got the stimulus, that the economy is going to recover. They still don't know that the stimulus is actually a sedative and the economy is going to suffer because of the stimulus. Sure, we've got more spending, but we're spending borrowed money, and we're digging ourselves into a deeper hole. A lot of people still think that the crisis is over, that we had the crisis in 2008, and now it's over, and the economy is recovering. Well, 2008 wasn't the crisis. 2008 was the consequence of the crisis. It was the chickens coming home to roost. There's still a lot of chickens out there. The crisis was all the years where we were recklessly spending borrowed money. We were running up these huge trade deficits and huge current account deficits. When we were shipping our manufacturing jobs overseas and allowing our industrial base to disintegrate beneath our feet. That was the crisis. What we're experiencing now is the consequence of that reckless behavior brought about by the Federal Reserve and by Congress and various presidents who encouraged all this over the years. That was the crisis. Now the market is trying to deal with the mess that the Federal Reserve and the government have created. It's unpleasant. People don't like dealing with reality, but this is the situation that we're in. I'm already hearing more politicians, again, talking about the fact that we need to have even more stimulus, which is what I said originally from the first stimulus. No, it's funny, I was watching another compilation video that some people made that are promoting a money bomb, and I was talking about how the stimulus wasn't going to work, and there was laughter. It was on Fox News, and I was like saying, who's laughing? And one of the other panelists said, I'm laughing at you. But this was having to do with the original stimulus. And, the more they stimulate, the bigger the problem gets. And all they can think of is upping the dosage. And they don't think about stopping the stimulus because the stimulus is the source of the problems. Initially when the weak jobs numbers came out and the stock market sold off, of course, the dollar rallied, gold sold off. That changed, and by the end of the day, the stock market only closed marginally lower, but the dollar actually lost its gains and closed lower on the day as well, and gold closed higher. The initial reaction is still to follow the stock market down. So when the stock market drops, you get traders selling their gold, buying dollars. It still hasn't dawned on them that the weak economic data is bad for the dollar. It's not good for the dollar. Because the weaker the data is, the more the Fed's going to want to stimulate, the more money they're going to want to print, the longer the Fed is going to keep interest rates artificially low. All of that is dollar negative. At some point, the world is really going to understand that. And as soon as they see weak economic data, the dollar will immediately sell off. We won't have this knee-jerk reaction where it initially gains strength, because at some point there's going to be a greater understanding or appreciation of how bad the stimulus is for the dollar. And of course, they're still talking about the need to remove the stimulus, that the Fed is going to get aggressive, that they're going to hike interest rates as soon as they have to. Again, none of this is true. I mean, they're just talking. They realize they have to pretend they're willing to withdraw the stimulus, but the reality was, if they were willing to do the right thing, they would do it right now. They wouldn't be supplying the stimulus in the first place because it's much harder than to remove it. You know, dealing with the consequences of removing it are much worse than dealing with the consequences of never having supplied it in the first place. But there is no stomach in Washington for doing the right thing. But it's amazing how many of the people on Wall Street continue to be surprised by the weak economic data and continue to think that it doesn't matter, that, well, employment is a lagging indicator and it's going to turn around and the economy is growing, and they look at the stock market going up and they think that because the stock market is rising that it must mean that everything is okay. Of course, it doesn't mean that at all. You know, we had the stock market rising all during the earlier part of this decade when the problems were really coming to a head. The stock market was clueless, absolutely oblivious. The market peaked 2 months before the recession began. So the market, more often than not, is going to give you a false signal. And probably, if anything, the strength of the market signifies inflation. It signifies that more people are understanding the risks in holding cash, and they'd rather hold real assets, even if it's overvalued U.S. stocks, because it's better than the alternative. Of course, the smart money is not holding anything in the U.S. They're buying overseas stocks. They're investing in Asia. They're buying precious metals, all that they can get their hands on. Anyway, that's it for this weekend. I hope everybody has a good weekend, and I will be blogging again early next week. Thanks, everybody.